I think it's really something that companies are going to evaluate. But it's not just companies, it's countries are also evaluating this. There are sovereigns who want to hold assets in Bitcoin. Why? Because it can't be controlled by another government. Bitcoin, really, if we look at the short term, will end this year somewhere between 50 and 100K. It's hard to tell. Um, Next year, likely getting close to 200K potentially. Increased in value anywhere from 20 to 35% a year, kind of on average over the period of time. Then, at 70,000 today, going forward to 2030, you're looking at 6 years. Yeah, 30% a year appreciation. That's totally doable. But Bitcoin changes its meme, if you would, and its bias a little bit depending on the types of investors who are buying or selling Bitcoin at any given moment. And I think what we're going to continue to see is Bitcoin have more pressure to move price upwards than to move price downwards in the near term. The ETF has attracted capital that previously was invested in mining equity stocks, so stocks in companies like Marathon. Some of that flowed out of those stocks and into the ETFs. And then you also have considerable outflows. GBTC has seen almost 50% outflows of its original Bitcoin balance from when the ETFs launched. And so now you're seeing significant outflows from GBTC, a lot of which has likely flown back into the other ETFs. You had a lot of people who bought shares in GBTC at 40% discount when Bitcoin was at $15,000 and $20,000. And now they're obviously monetizing that and then reinvesting some of those proceeds. But essentially, most of the ETF inflows have really been retail dollars at this point. It's still, as an institution, a little bit hard to invest in these ETFs. And as anybody who maybe banks with B of A or some of these other large banks finds, you have to literally ask permission to almost buy these ETFs through the banks if you're using their brokerage account. So I think we're still early in the adoption cycle from the ETFs. But essentially what's happened is the normal Bitcoin cycle has moved forward. We're going to see a kind of bumpy sideways road here around 70K. If Bitcoin breaks through 70K with strong momentum, then we may see another run up. But I think at some point here, the market has to consolidate. We've already seen some of that happening on the equity side. I think we're going to start seeing it here on the ETF and the spot market side.
Predictions. She has updated her forecast a few months ago. She now sees $600,000 by 2030. That's the base case. Perhaps 1.5 million. I think the assumption here is that Bitcoin will continue to advance alongside technological innovation. I think that's always been her underlying assumption here. Can you just address that forecast, whether or not it makes sense to you?
Well, if you think that Bitcoin historically has increased in value anywhere from 20 to 35% a year, kind of on average over the period of time, then, at 70,000 today, going forward to 2030, you're looking at 6 years. Yeah, 30% a year appreciation. That's totally doable. We don't look out quite that far. I mean, we limit our outlook, kind of internally to about 2028. And while we don't publish pricing forecasts, we believe that likely, and this is more really my personal belief, that Bitcoin, really, if we look at the short term, will end this year somewhere between 50 and 100K. It's hard to tell. Next year, likely getting close to 200K potentially at the high end. Otherwise, most certainly somewhere in the 125 to 150 range. Does the cycle repeat and you have a bit of a bear market, or are we done with historical cycles, and because of the ETFs and longer holding institutional interest in Bitcoin, do we start seeing less volatility, which also means potentially less price appreciation on a long-term basis, other than that driven by pure supply and demand? Again, most people think of Bitcoin and compare it to gold or other commodities. The key difference between Bitcoin and gold is that there's a finite supply. There's only 21 million Bitcoin. Arguably 4 million of that 21 million have been lost, and we still have yet to mine about 1 million of it. So you're talking about potentially 16 million Bitcoin that could be tradable on any given moment. Most Bitcoin sits off exchanges in cold wallets, hasn't moved in 6 to 9 months. Over half of Bitcoin hasn't moved in 5 years, all of which says at some price point that Bitcoin will move, of course. But I believe that with the finite amount, if you start seeing, 1% of 401k assets beginning to be allocated to this type of an asset class over the next, say, 5 to 10 years, there's not enough supply to provide that level of investment in Bitcoin without the price going up significantly. While longer term volatility will decrease in the short term because of the amount of Bitcoin that's not on exchanges and the time it takes to get Bitcoin to exchanges from off-chain wallets, we'll see a lot of volatility in the price. Swings of 10% in a day will be normal fodder, I think. So I think that we're either going to go into a recessionary period, in which case people may decide to put actually more money into assets like Bitcoin, which tend to be anti-inflationary and maintain value. But at the same time, there'll be less risk assets available. So it's going to be very interesting to see how Bitcoin behaves, because it acts a little bit like a chameleon, or a leopard rather, in that it changes its spots. If you go back to during the period of COVID and all those subsidies, there was a lot of money. People bought a lot of Bitcoin, things like that, stocks, etc. Then we had the drop in Bitcoin, and then all of a sudden Bitcoin started acting like an inflation hedge again. So Bitcoin changes its meme, if you would, and its bias a little bit depending on the types of investors who are buying or selling Bitcoin at any given moment. And I think what we're going to continue to see is Bitcoin have more pressure to move price upwards than to move price downwards in the near term.
FASB issued the Accounting Standards Update 2308, which basically allows companies to record crypto holdings at fair value. What do you think this change means for companies, and whether or not it would incentivize companies to hold more or less Bitcoins?
It clarifies how Bitcoin is reported, which is 9/10 of the battle in this case. Because if a company is going to hold Bitcoin on their balance sheet, they have to have a very clear ability to report on it, and investors in those companies have to have a very clear ability to understand how the value of that Bitcoin is going to change over time. And by the old standard, where you could only impair its value, Bitcoin might have been at 100,000, and that Bitcoin may have been impaired down to 15,000, which was kind of the low point of the most recent drawdowns. And you would have this delta between the real market value of the asset versus the book value. Now there's clarity. It's mark to market treatment, which makes it much easier. So essentially a company will hold Bitcoin on their balance sheet just like they hold cash. Now, does that mean they're likely to hold more of their assets in Bitcoin? I think over time, yes, it's going to take a while, but I think you're starting to see companies begin to evaluate it as a way to store cash. Your alternatives today are to put money into T-bills. You're going to get 5%, 5.5%, something like that. So what's the alternative? And Michael Saylor has for years been the advocate of taking corporate assets and putting them into Bitcoin. And while he has accumulated more Bitcoin than most companies would feel comfortable with, it certainly has worked out quite well for him. It's really something that companies are going to evaluate. But it's not just companies, it's countries are also evaluating this. There are sovereigns who want to hold assets in Bitcoin. Why? Because it can't be controlled by another government. And having sovereignty over your assets is very important, especially as a commodity producer. So I think you're going to start seeing more countries holding small amounts of Bitcoin in their balance sheet as Bitcoin begins to continue to permeate the institutional investor base. And then you're going to see all sorts of derivative products that are Bitcoin related products. You'll see options, you'll see the funds that short Bitcoin versus go long Bitcoin. You'll see all sorts of different investment instruments that companies will be able to use to get exposure to Bitcoin without actually having to hold Bitcoin in a wallet. So I think the fact that it's now readily available with institutions, you could go to Fidelity and buy and sell Bitcoin, spot Bitcoin directly. You can use ETFs. You can use all sorts of different things that make it easy for corporations to hold it. Now with this new reporting, it's easy to report on it. Bitcoin is the most secure place to store something. And so what you're really going to see is innovation on layer 2, where because there's only one Bitcoin block minted every 10 minutes, that level of transaction speed does not work well for Bitcoin to act as a medium of payment, but it does work well as a store of value. And so what you're going to see is more systems like Lightning built on layer 2s with Bitcoin that act as that means of payment. You're going to see all sorts of data stored at layer 2 with the security anchored in the Bitcoin blockchain. You're going to see digital identity products launched, which is likely the next big use of the Bitcoin blockchain, where people will essentially have a digital ID. Think of it as a token that once you have validated your identity with some form of authority, say a bank, government, whatever it might be, they issue a token that is now your ID, your KYC, if you would. And whenever you need to do a transaction with somebody and they need to validate your ID, you simply show the token, and they can validate that it's real without getting the underlying data. It's part of this concept of zero knowledge proofs. And when you get to that level, then people can have trust without actually having the underlying knowledge about the person.